In this video, I will backtest a really interesting indicator that, if used correctly, can make you a lot of money. To see how much money it can actually make, I will backtest it 100 times on the Forex market with an initial account size set at $1,000 with a 1 to 1.5 risk to reward ratio. I will also show you how to build a highly profitable strategy with this indicator at the end of the video, so stay tuned for that. Like, subscribe, and turn on those notifications so you don't miss out. Now, without further ado, let's get into it. Okay, so first you need to navigate over to TradingView.com, and we're currently looking at the price of GBP versus USDT on the 15-minute time frame. The indicator we're going to be building a strategy around today is called VXD. So navigate up to our indicators tab and search for VXD Cloud Edition by VAZ. We can see that this is already a strategy on its own, and if we take a look at our win rate, we see that it is only 29%. The reason that these numbers are so low is because the indicator is being used in the wrong way. If we take a look at some of these signals, we can see that there's shorts being issued when the price action is in an uptrend, and this is confirmed by the longer length moving average. So we do actually need to make a few changes to this. So first of all, double click on it and let's make some adjustments. So before we get into my method of using this indicator, let's first understand what this indicator consists of. So if we zoom in, we can see that this tool consists of 4 pieces. So first of all, we have this purple moving average, and this is actually our 200 EMA. And based on this 200 EMA, we're going to be determining the overall trend direction. So if the price action is below the EMA, we are officially in a downtrend. And if the price action is above the EMA, we are considered to be in an uptrend. The second piece that this indicator consists of is this RSI MA. This MA also changes color depending on the price movement. If the price action is in a consolidation state, the line would usually be colored in yellow. Once we start seeing some bullish momentum in the price, the line will start to turn green, and if we have some bearish movement going on, the line will turn red. These color changes cannot be considered as trade entries because they're quite inaccurate. The next piece that this indicator consists of is these support and resistance lines. These lines can be used for trade entries, and I'm going to show you how we can actually use them in a second. And the final and fourth piece that this indicator consists of is these bar colors. We see that sometimes the candlesticks turn from regular to orange and green, and these can also be used for identifying the best trade entries. Okay, now let's actually understand the rules for our first strategy. Alright, so the rules for entering a short trade are simple. We're only going to be looking to sell if the price action is closed below these 2 lines. The 200 EMA has to be positioned above our RSI MA. And our last condition will be to have a bearish breakout, and for that we would need to have a bearish candlestick that would close below our most recent level of support. And once we have all of these conditions met, we can place a sell order at the close of our trigger candlestick. Our stop loss can either be set at our most recent swing high or at our RSI MA, depending on which one of these 2 prices is closer to our entry price. So as you can see in this case, we will set our stop loss at our RSI MA. Then our take profit target will be set at 1.5 times the risk. As we can see, we had a nice successful trade. The exact opposite rules apply for long entries. So first of all, the price action has to be closed above these 2 moving averages. The 200 EMA has to be positioned below our RSI MA. And the last condition will be to have the price action break above our most recent level of resistance. Once all of these conditions are met, we can safely enter our long trade on the close of our trigger candlestick. And as I said, in our short trade, you can either have your stop loss at the RSI MA or at our most recent swing low, whichever one is closest to our entry price. So in this case, we'll be using our RSI MA and targeting 1.5 times the risk. Okay, let me show you an example where we wouldn't have taken a trade. So here we see that we had a bullish breakout. The price action is positioned above both of our moving averages, but the problem is the RSI MA is positioned below our 200 EMA. So in this case, we would have skipped this signal. If we had have entered, let's see how it would have played out. If you took this trade, it would have resulted in a loss. Just take a look at how well this strategy works when the market is trending. But obviously this is not always the case. As we know, the markets are only trending 20% of the time. So yeah, let's actually do our backtesting and see how well this strategy would perform in different market conditions on its own. And then after, I will improve this and make a proper strategy from it. Alright, so the backtesting is done and the results are actually quite impressive for a single indicator. The win rate is 54% and we increased our account size by just below 95%. Our profit factor is 1.76 and we had 6 consecutive wins against 6 consecutive losses, which definitely tells us that this indicator is worth testing. These numbers can definitely be increased if you added a second confirmation indicator or a volume indicator to the chart. And as I said, I'm now going to show you what indicators to actually use with this. So first of all, I would definitely be adding a volume indicator to the chart. The volume indicator I would be using would either be the heat map volume or an HVI. Of course, the settings on these indicators can be adjusted. Our goal is basically to eliminate taking trades when the market is consolidating. And right away, we can see that this heat map volume indicator is doing a great job. However, because this volume indicator isn't that sensitive, we can actually miss entries like this. And here we see that the second indicator is actually a bit better. However, it does get us into some trades like this. But you can tweak the settings and change the sensitivity, and we can see that it still quite didn't eliminate this losing trade, yet it did eliminate this profitable trade. So in this case, I would definitely try this heat map volume instead, and to eliminate even more losses, you can add a second confirmation indicator. For that, I would use a filter, something similar to Trend Meter. So let's actually add a Dawn Chain Trend Ribbon, which is by Lonesome. And the idea here is simple. You would only be entering the trade when you had all of the conditions met. Like this one here, we had our breakout. Our volume heat map confirms there is enough volume in the market. And then our Dawn chain is colored in green. The exact opposite rule applies for short trades. We would need our volume to at least be yellow, orange, or red. We also need that break of support. Then looking down towards the Dawn chain, and it needs to be colored in red. You can also use this RSI MA as an exit indicator. So for example, you took a short position right here, and you wouldn't be exiting until the price action managed to break back above it. And as you can see, that would have returned you a good bit more profit. I'm not saying that you should use these particular indicators. You can definitely try some other options. But if you do want to go ahead and backtest this or forward test it, do so with paper money and see what results you can get while trading live. Okay traders, I hope you did enjoy. If you have any questions, please ask them down below in the comment section. Like, subscribe, and turn on those notifications so you don't miss out. I love you all. Peace.